My name is Michael King. Today, with Richard Nesbitt, we're going to be discussing our book, The Technological Revolution in Financial Services, How Banks, Fintechs, and Customers Win Together, which was published by University of Toronto Press in August of 2020.
I'm a member of CFA Society Victoria, but also a finance professor here at Gustafson. We're not going to be talking about Bitcoin for anybody who is hoping to get some tips. We're instead going to be looking more at the business side of financial services, and this is really work that Richard and I have been doing for some time. So, Richard, why don't you introduce yourself?
Yeah, sure. As they said at the opening, I currently teach at the Rotman School in Toronto in the second year MBA. I teach a class called How Banks Work. Before that, I was the Chief Operating Officer and head of the investment bank for CIBC. And then before that, I was the CEO of the Toronto Stock Exchange. So I've spent a lot of my life dealing with finance, obviously, but also a lot dealing with technology and regulations.
This edited volume really is trying to look into how the financial service landscape is evolving. It's not just about banking, but also more broadly, wealth management, insurance, and other payments, other pillars. And this book actually has 15 chapters that were written by one or more subject matter experts. Almost all of them practitioners like yourself, because we didn't necessarily want to concentrate only on academics talking to practitioners. We wanted to hear from people who are experts, who are in the jobs, and it's part of they're sharing their insights. So, Richard, why don't you give the background of how we ended up writing the book?
Sure. Well, it goes back to 2017. You and I got to know each other when I was running what's called the Global Risk Institute, and you were at Ivy. We were debating how fintech was going to change the financial services industry. So what we decided to do was put on a one-day conference, which we did, called The Future of Financial Services. We had tremendously good feedback from that. We had a lot of wonderful speakers. And decided that we should put these ideas down on paper for a broader audience.
Coming out of that conference, it was pretty clear that there was a lot going on in terms of how financial services was being transformed globally. But both Richard and I know, as you do, that banking and finance are constantly evolving, and they're always making big investments in IT. So we were trying to identify what was different this time. And what we found was that these changes that were happening were not just cyclical, they were really structural in nature. And they were really being driven by three forces: the heightened regulation following the crisis, the big investments, but also the sort of technological disruption that was coming from these fintech startups, and also, curiously, by demographics with the entry of millennials and the aging of the population. And this was changing the competitive landscape in a way that it lowered the barriers to entry, allowing a lot of new entrants into the industry and increasing competition. And when we say fintech, at one end you have small fintech startups that are venture capital backed, but at the other end you have big global technology companies that we tend to refer to as big tech, or if they're from China, tech fins. We're talking about Alibaba, Tencent, Google, Amazon, Facebook, and everything in between, including some mature players that had survived from the previous dot-com bubble, such as PayPal. The loss of trust that happened during the financial crisis created an opening for these new entrants, because many people were looking to have their problem solved by going to a nimble, easy to use financial app or website to get their financial services. And they were principally getting a foothold at the bottom end of the market, using that playbook from Harvard professor Clayton Christensen called the disruption theory, where you get in at the bottom with a product that's just good enough, and then you improve it and move up, and you take the customers away from the incumbents.
So a lot of change happening in the industry over a fairly short period of time. So what Michael and I decided to do was, rather than attempt to just write the book from two people's point of view, we thought we'd go out and attract some of the global experts that are in these fields around the world. So, and we posed 4 questions to them. What are the structural forces transforming banking and financial services? How are these forces changing the competitive landscape and the value proposition for customers? How should incumbents adapt their strategies and business models to respond to these challenges? And what actions do senior leaders and executives at financial institutions need to take to be successful in this environment? So, our working hypothesis was that traditional banks, asset managers, and insurers will continue to dominate our financial services, but that the most successful incumbents will partner with fintech startups to provide a better experience to customers at a lower cost.
Our conclusion from hearing from our experts is that the real threat is coming from global technology companies like the tech firms Alibaba, Tencent, as well as big tech companies that I mentioned, the ones you see here. And these companies have these platform ecosystems, and what they're doing and what they've done over time is they embed financial services into their non-financial product offerings. And those financial services include payments, lending, investing, insurance. And we think that these technology companies are going to be the real threat to incumbents over the coming decade.
So we divided the book into three parts once we received the contributions. The first section of 6 chapters kind of sets the stage and explains, technological transformation of financial services. The second section, which is 7 chapters, examines the business models and value propositions of new entrants, and then how incumbents are adapting their strategies and business models to respond to these challenges. The third section of 3 chapters focuses on what senior financial leaders need to do to take advantage and be successful in this new digital era.
What did we learn from all of these subject matter experts about the future of financial services? Well, we put it together in this concluding chapter where we basically discuss the key insights from these thought leaders, as well as our own views on where the industry is going from a strategic point of view. And we highlighted 6 takeaways to guide both incumbents as well as new entrants over the coming decade. So to whet your appetite, we're going to share 4 of them with you today.
First, technology is not a strategy. It is a tool to help achieve strategic goals. So strategy is the answer to 3 questions. Where is an organization today? Where does it want to go in the future? And then how will it get there? Technology can provide better tools for pursuing this strategy, but technological innovation itself is not the end goal of strategy. Technology does not provide sustainable competitive advantage. It is widely available and can be copied by competitors who are fast followers. The biggest barrier to entry in banking is not technology or even regulation, but access to customers. With this clear view of how technological innovation fits in, the answer to the first 2 strategic questions, where are we and where are we going, requires an understanding of what really makes banks work. Banks are highly leveraged, highly cyclical, and highly regulated entities. So risk management is crucial to their success. And secondly, banks need to compete for customers, reduce the cost of their activities, and constantly improve customer service. Technology is a key enabler for bank strategies to manage risks and to face these competitive forces.
Another key conclusion is that trust in financial services is really paramount, and that has to be supported by data security and privacy. One of the most enduring impacts of the global financial crisis was the damage it caused to trust in traditional players such as banks and other financial intermediaries. And it was this loss of trust which opened the door to these new entrants from outside the industry. Trust in financial services, however, is really intertwined with cybersecurity and data privacy. And cybersecurity is clearly the biggest operational risk facing any financial institution today, as well as other businesses. The mindset in your organization has to change from what to do if we are hacked to what to do when we are hacked. You have to find it fast, you have to disclose it and deal with it immediately, and you have to minimize the impact on your customer. That's critical. A second big issue is data privacy. Consumer advocates as well as individual citizens really are aware of these mixed incentives created by the advertising-based business models of online platforms such as Facebook and Google. So this is one area where banks and other financial incumbents can regain trust by stepping in to protect customer data, privacy, and identity. Open banking is good for your industry. It will increase data security by putting in place a secure way to transmit individual data using APIs so that we can get rid of screen scraping technologies or sharing of passwords. And this security will be bolstered by other technologies that protect trust over time, such as blockchain.
So next, regulation and risk management remain pillars of financial services. Regulation is not going away, and we shouldn't want it to. Leading banks actually support higher regulatory requirements in order to weed out bad actors. So we want to see regulation extended to fintechs and to the shadow banking system. Maintaining a level playing field and avoiding regulatory arbitrage are important. Fintechs and other alternative financial providers need to be held to the same regulatory standards as incumbents. And of course, effective risk management across the business cycle will continue to be the driver of a bank's success. Financial incumbents today possess this expertise. Fintechs sometimes do not. And so fintechs and other new entrants will inevitably face the same need to invest in risk management and compliance to meet these regulatory requirements.
So the last conclusion we're going to share today, and we're almost near the end, is the one that's kind of encapsulated in the title of our book. We believe that partnerships between banks and fintechs will be the winning combination and will deliver a superior experience to end customers. Ultimately, banks and fintechs are not rivals. The ones that combine their respective strengths will be the most successful in the coming decade. So if you take the banks, they have a large number of customers, expertise in risk management and compliance, they have funding, and they have scale. But these incumbents tend to be too product-centric. They view the world in terms of pillars of deposits, loans, payments, investments, and others. They're using technology as a tool to reduce costs and to increase profitability while meeting their increased regulatory requirements. But fintechs are understanding the customer's needs and their journey. And they're using technology in a different way. They're using technology and design thinking to develop innovative solutions to customer pain points. These startups are employing agile teams. They're running disruptive business models, as we described. And they are customer-centric, not product-centric. And that's a really key distinction. They're using technology to offer an experience that's just simpler, faster, cheaper, and better. So the most successful strategies for these two to partner, combine their respective strengths to deliver a better experience to customers. Because they both face the same threat, which is coming from outside of financial services. Whether it's the Chinese tech fins or the North American big tech companies, those platforms are bundling financial products with their other non-financial products and services. They've got billions of customers already. They have massive databases that they're mining using artificial intelligence to generate insights to what those customers want. They can identify the need even before the customer knows they have them. So no matter who wins the battle, we believe that the technological revolution in financial services will benefit end customers by providing a better financial service when and where they need it at a lower cost.
So thanks. That's what we wanted to tell you today about our book. Thanks to you for your attention. And of course, we encourage you to buy a copy of our book online at University of Toronto Press website or on Amazon.
Thank you very much for your time today.